Look, here's the thing. This morning when the jobs numbers came out, we pretty much said, I actually literally said, that this jobs report is the nail in the coffin to the taper happening this month. The Federal Reserve meets on September 22nd. You should have that date written down, September 22nd. But you should also have the CPI report written down, September 14th. The reason for that is, in the jobs report, we had a 7.2% annualized inflation reading for wages. 7.2% annualized, 0.6% month over month, could jack up the CPI. If the CPI on the 14th comes out with a substantial inflection point to the downside, nail in the coffin confirmed, I expect no taper in September. If the CPI reading comes in high, because even though we're adding fewer jobs are job inflation is skyrocketing because people are rushing to try to hire people, then we would expect maybe the taper could still happen in September. However, the places where most people are getting hired right now are in things like business services. In fact, I'll pull it up really quick. We'll look at it together here really quick. This is very important because in the last CPI report, most wage inflation was actually in entry-level jobs like retail and hospitality and restaurant jobs. That's where most of the wage inflation was. So you can't just lump all wages together, right? Most wage inflation was in the starter-up jobs, not in things like what we see over here, which is architectural and engineering services, business and professional services, private education, maybe in motor vehicles, other services, financial activities. We haven't seen a lot of inflation in these particular jobs here. We've seen most of the inflation right here in these jobs down here. But look at this, leisure hospitality unchanged. Retail trade declined with losses in food and beverage stores of 23,000 jobs, garden supply stores 13,000 jobs, and the $42,000 decline, 42,000 job decline in food and drinking places, with leisure and hospitality employment down 1.7 million or 10% since Feb 2020. That's obviously comparing to before the pandemic. But month over month, you're seeing those declines. So my expectation, we're going to look at something here in a moment, my expectation is we're going to see this taper get delayed because even though we still have that CPI data coming out on the 14th, we expect that most of the folks who are actually getting employed are not the ones in the industries where wages are skyrocketing. Where wages are skyrocketing, we're actually not seeing as much job growth, even though average hourly earnings here did show an increase in this particular report. Worth noting. Okay, let's see here. Also, look at this disclaimer here. This is very interesting. Look at this. I just noticed this. Check this out. Right here. However, because average hourly earnings vary widely across industries, the large employment fluctuations since February 2020 complicate the analysis of recent trends in average hourly earnings. Also very interesting, because that's potentially another way of saying, hey, like even though we saw this increase here, maybe the average hourly earnings went up because we had more people in these higher skilled jobs. Also possible, which is not necessarily that CPI inflation. In fact, they reference tables B3 and B8. We can take a quick peek at that, and then I want to get to this Bloomberg article. So let's pull the labor report. That's interesting, because we want to get as much information as we can now going into the CPI report to be prepared. Okay, I've got the table here. Okay, that's this button right here. So here's our table. And here you go, average weekly hours and overtime. Okay, this is how much they're working. So we don't want that one. We want this one, B8. Here we go. Average hourly earnings. So where did things go up? That's what we're looking for. In fact, you know what? Let's go ahead and put this really quick to where I can annotate it. This will be interesting. Okay, so we're going to drop this right in here with the labor report. Give that a second so we can annotate it. Here we go. So where did wages go up? Average hourly earnings we know went up. So what we're looking at is here. Where's the biggest increase? So we had a $4 increase here. We had a decrease here. We'll make that pink. Here was an increase. We'll go with yellow for that. Little increase here. This was a little bit bigger. I guess I can highlight that one too. That was about the same. This had an increase. This had an increase. This had a bigger increase here. This had a, no, that's nominal. That had a decrease. No, I'm sorry. This actually had an increase. Slight increase here. Okay, so these are the things that are going up. So total private went up. Mining and lodging went down. But otherwise, manufacturing went up. And transportation, warehousing, utilities, information. See, none of those are actually the lower wage jobs that are showing the big inflation, right? And that's usually where you see the big inflation. So I wonder how that'll be reflected in CPI. Leisure, hospitality right here only made up an increase, interestingly, but that's surprising, of about $1. So that could be good for CPI because we don't expect that these sectors right here to be the main drivers of longer term wage inflation, because generally we see most of the wage inflation here. That's fascinating. Okay, so we'll see how CPI comes out and their reading, but let's go ahead and specifically talk taper here and jump on over to Bloomberg. So with Bloomberg, they just released this article after we had obviously our video this morning talking about how I don't think the taper is going to happen. Anyway, Fed delay taper past September is all but certain, is what Bloomberg is reporting now. So Bloomberg is saying that, and we've, okay, sorry. Disappointment over the August payroll report is all but certain to delay. Obviously, the jobs report came in low. They're saying here, this report puts September off the table, says a Fed economist. I agree with that. Tapering later this year is still a bear case, and the data over the next few months will be important in determining the announcement. I mean, that's almost saying that it's entirely possible we could just rotate into next year for the taper. I believe that. At the July FOMC meeting, most Fed officials agreed it would probably be appropriate to begin tapering. The central bank, right at the end of September, or at the end of the year, but there's also been talk about the end of September. But this changes that. The sharp slowdown in hospitality and even retail job creation can be seen as evidence that the Delta variant is having an impact on the job market. True. Jerome Powell said that we had made clear progress and expected the gains to meet the goal of substantial further progress needed for tapering, but that just got screwed up by this jobs report. And labor force participation remained flat. The hawks could get more resistive due to persistently higher wages. So that's the risk factor in all of this. So the risk factor in all of this, and that's the way to end this talk about this taper, the risk factor in all of this is that these sectors that have not been inflating as much yet start inflating more. These yellow sectors right here on the left. If we see these numbers go up more and more, then we're going to have potential issues with the taper coming sooner and inflationary issues. But so far, while they've been going up, they haven't been going up as crazy as some of those entry-level jobs. So, in other words, bottom line, expect the taper to get delayed. We'll see what happens, but I do expect the taper to get delayed. It's worth noting for clarity that yes, the CPI does actually break it down services. If you just type in services when you're on the CPI pages here, you'll see financial services, personal care services, legal services, delivery services, right? These are all things that get measured, including pet services, recreation services, hospital-related services, dental services, gardening, lawn care services, everything, including obviously rents and that. So it's just worth noting that the CPI does track this, and not only does the CPI track this, but also obviously the labor report. So if we see both the labor report and CPI starting to see other sectors outside of hospitality having their wages go up, and it starts looking unsustained, it's going to be a problem. It's going to keep inflation up higher. So now, with the taper not coming, what do we pay attention to? Personally, I believe we pay attention to higher value stocks, especially tech stocks, and specifically safer ones. I love if we get an inflection point to the downside in inflation, which I expect. I am all in on things like Apple, Google, Amazon. Big fans here. In addition to, or big fan here, in addition to being a big fan on these safer stocks, also obviously big fan of things like Lemonade, Hippo Insurance, Matterport. We've got, what else do we have? I don't know, lots of things here. Palantir. Let me take a look at some of these other ones. The bigger techs, right? Bigger tech things, smaller tech. Let's see here. Momentum doesn't necessarily trade off inflation. Pinterest is okay. Bullish for Tesla, obviously. SoFi's okay. C3AI, okay. Coin's going to be up in the air. See, if inflation does inflect downward, I don't know if it's going to be great for crypto. So crypto is one I'm a little more nervous of. In fact, this morning when we saw those wages jump, crypto skyrocketed. It was like instant, like Bitcoin, boom, $1,000. Here, well, I'll even show you. It's worth looking at because I want you to see this. Just when this jobs report came out this morning at 5:30 in the morning, take a look at this. It's so worth seeing. So right here, we have jumps and spikes and all this, but this was perfectly timed right here. You had the bottom at 49.9 right before the jobs report. Jobs report comes out here. First minute, this right here, that 5:30 minute, the market's like, oh my gosh, employment numbers came in way lower than expected. And then, but wait a minute, inflation for wages is 0.6, that's 7.2% annualized. 1,000 points in like 3 minutes, or $1,000 in 3 minutes. It was incredible. So worth noting that. But yeah, otherwise, Etsy, Redfin, Google, Amazon, Square, right? These are stocks I think will do very, very well if we get this inflation inflecting down. This September 14th is a big moment. We have literally on this channel been waiting for September and October. It's finally here. Now I want to get rewarded. I've been very patient. Anyway, thank you so much for watching this. We'll see you in the next one. Get your insurance by going to metkevin.com/lemonade. Life insurance, pet insurance, renters insurance, and homeowners insurance. metkevin.com/lemonade. Thanks for watching.